the first person of our region, man with a vision, and a technological person, CA DC Jain, and our Secretary of SIRC, very young and dynamic person, CA Vivek Murali, and our sessions chairman, session speaker, Ismail Sonawalla sir, and my dear professional colleagues. Very good morning. First of all, I would like to congratulate our SIRC chairman for bringing this unique concept of bank branch audit for the first timers. So he has built together a series of sessions to cover the relevant topics in a crisp and clear manner. Thank you very much, sir. So now I request our SIRC chairman, DC Jain sir, to render his welcome address.
Yeah, happy morning to all of you again for the second session on an important topic of the IRAC norms and the advances. In fact, the speakers whomsoever we scheduled for the bank audit, which was going to be held, we are now able to bring everybody through the webinar. And Ismail Sonawalla sir was the last. We said when we met in Madurai, sir, we'll see that a webinar kind of happens for the benefit of all the members. And rightfully, we are seeing one. So I welcome you for this webinar to see that more people actually now will get benefited than they would have benefited when we would have had the program at SIRC. Geeta ma'am, all yours, ma'am, screen.
Thank you, Chairman, sir, for your welcome address. Now I request our dynamic secretary, Abhishek Murali, to brief us about today's program and upcoming programs of SIRC. Over to you.
Thank you, Treasurer ma'am. Geeta AV ma'am is, of course, the treasurer of our region, and she's from Bangalore. Thank you for a very lovely introduction. It felt like a TV journalist was speaking to us, ma'am. Very professionally done. So, Honorable Chairman of the region, CA Dungar Jain, who is joining us from Madurai, and CA Ismail Sonawalla sir from Mumbai. I welcome all the audience also back for this program. Maybe some of you are joining new for this program. You were not there for the program which we had from 9 a.m. in the morning. Today's session, and this session is going to be handled by CA Ismail Sonawalla sir. And as you're all aware, we have one more session at 2 p.m. on CBS and other aspects pertaining to bank audit, handled by CA Anand, Prakash, Jangid. That is at 2 p.m. today. It's a separate YouTube link that is available on our SIRC YouTube page or on our SIRC website, or you can also see our SIRC Facebook page also. All three are available there. We also have a program scheduled on 27th of April, Audit in Time, that need to innovate as auditors is going to be handled by CA PK Ranganathan. CA PK Ranganathan, that is on 27th April at 11 a.m. That's the usual time. We also have scheduled on May 1st a session on income tax at 11 a.m. CAT Manushekar will be speaking on income tax issues based on penalties under the Income Tax Act. And on May 2nd at 11:30 a.m., along with the Audit and Assurance Standard Board of ICAI, we are organizing a program on the overview of bank audit, where our past president, CA Amarjit Chopra, will be addressing, along with our beloved Central Council member, CA G. Shekhar. These are for the announcements for now. We are, of course, constantly taking your feedback. We are seeing how we can improve our programs. Our chairman, as rightly said by the session moderator, he is a very technologically savvy person, and he has taken up a lot of initiatives in ensuring we communicate a lot of information to our members despite this lockdown period. So we are all in touch with the subject, and please do share with our feedback. We are definitely listening. We want to make a difference, so please do share. We'll definitely implement whatever changes you are sharing. With these brief announcements, I hand over the session back to our session chairman, the treasurer, CA Geeta ma'am.
Thank you, Abhishek, for your wonderful updates. Now, without much ado, we will move on to the technical session. That is an important part of our bank audit. I could say it's a cream of our bank audit, heart and soul of the bank audit, that is on advances and IRAC norms. These norms require in-depth knowledge and understanding of the provisions we need to verify and certify NPA classification and income recognition. Though our bank officials usually say everything is system driven, but without understanding these provisions, it may affect our audit report and audit opinion. So for this interesting session, we have with us CA Ismail Sonawalla to enlighten our viewers and first-timers in particular with his knowledge and experience on advances and IRAC norms. Before handing over the session to our speaker, I'll just briefly introduce him. CA Ismail Sonawalla is based in Mumbai and practicing chartered accountant since more than 33 years. He's managing partner of Measures RMI Associates Chartered Accountants. Since last 22 years, he has been a regular faculty at various lectures, seminars being organized by various regional councils of ICAI. He has delivered more than 135 lectures all over India on various topics concerning accounting, auditing standards, audits of commercial and cooperative banks and credit cooperative societies. And he has more than 40 years of audit experience of nationalized banks, private sectors, and cooperative banks. And he has finalized more than 175 bank branch audits of all major nationalized banks and cooperative banks. And he is a regular contributor to WIRC reference manual since its inception, and he has also contributed articles on various topics in our CA Institute journal, WIRC booklets, as well as all our publications. And his latest article on the topic verification of advances has been published in this year's seminar booklet of WIRC. So with this brief introduction, now I'll hand over the session to our speaker, Ismail Sonawalla, sir. So over to you, sir.
Just a second, Ismail ji, before you just take over the session, a small request to all the viewers. We are running a very tight schedule where we have another program scheduled as 2 p.m. as I said, and sir is condensing his presentation. Normally it is a 3.5-hour presentation, and he is trying to condense it into the short time that we have given. So we request that questions be given, pertinent questions only to this session, and we will be trying to take up as many questions as possible within the given time. So we may not be able to take the same number of questions we have in the past, given the nature of the session. So over to you, sir. I'm sorry to interrupt.
Thank you very much, Mr. Jain. Speakers, I met your chairman for the first time at Madurai. I am highly impressed by the way in about 2 hours time he was able to organize the webinar, because the previous night only that order had come that programs cannot be organized. So instead of starting at around 10 o'clock, we started at 12:30. In 2 hours, he was able to organize live webinar and also the taping. Hats off to Mr. Jain. He also knows 5 languages that I know. He also can write in the reverse way. In different languages. I have that paper, so he is a highly talented chairman. Your region is blessed with it, and best of luck to all of you. Coming to the topic, as you have just been told that I have to condense my 3.5 hours lecture into 2 hours, so I will try to say as much as is possible. Actually, there are many stories which I would like to share. To be very specific, there are about 32 stories which I have got. These stories are not made anywhere. These are the stories that I have personally faced while doing my bank audit. And from that, I will be selecting some of them to be told to you, so that when you are doing your bank audit, you are able to do it in a better way. I'm sure you are all aware of the RBI site, www.org.in. This is the website on which all our circulars and other things are available. Probably you may have been allotted the bank audit by now, or you will be allotted the bank audit after the lockdown is over. It is very necessary that you go through all these circulars, because this is the basis on which the bank audit has to be done. That is my first suggestion to you. My practical experience is that the branch managers, as soon as you get appointed, they are going to find out how experienced you are and how much you know about the law. And if by any chance they come to know that you don't know things, I will give an example. 2 years ago, I went to do a bank audit. Before going there, I called up the manager. I spoke to her. She was the lady manager, and she said, "Okay, we are ready. You can come." It took us 18 man days to complete that audit. After the audit was completed, and I have signed the papers. Usually, I take a feedback from the branch manager what he or she feels about the whole audit. So this lady tells me, "Yes, sir. As soon as I spoke to you, I realized that you know a lot about bank audit, and I cannot fool you. But let me tell you, last year when the auditors came in, I realized that he doesn't know anything about the audit. So in about 2 days time or 3 days time, I ensured that I showed him only those things which I wanted to show, and the audit was completed in 3 man days, whereas we took about 18 man days. So the branch managers are sharp enough to know whether you know or you don't know, and that is how they may be able to fool you. The fact remains that there are certain things, if we don't read, there are certain things that we are afraid of as far as the bank audit is concerned. And most of the things that we are afraid of is called what is called foreign exchange, foreign advances, etc. etc. We don't want to go and tell the branch manager that we don't know about certain things, and as a result, we are wherever net checker.
Ismail sir, it is working fine, sir. You can proceed.
I can proceed. Okay, I told you I have got some problem with the net. Okay.
No problem, sir. You are on, sir. You are on screen.
Okay. So coming back to the foreign items, we don't want to tell to the branch that we don't know, and as a result, we don't venture into those areas, and as a result, we don't do the audit of those areas. I'm going to give you certain hints of how to do that audits. Don't be afraid. That is my suggestion to you. Don't be afraid of bank audit. If you have read your papers, you will be able to do it. And there is a helpline available by the CA Institute, which is on. You can put your questions on that. Your questions will be answered in 24 hours time. That is what the CA Institute tells us. And I am also on that panel to complete it. And yes, we will answer your questions. We make it a point to answer your questions. The next practical suggestion I would like to give you is don't sit in the branch manager's cabin. The branch manager's cabin is something which is called sanitized. Sanitized, we have heard this word very much. That is a cabin in which no employee is going to come to make any complaints. No staff no client is going to come and say anything. So the branch manager will be able to tell you only those things which he or she would like to tell you. That is not the best place to sit. Go and sit outside with the staff. And when you sit with the staff, keep your eyes and ears open. I repeat, keep your eyes and ears open. Because when your eyes and ears are open, there will be many people and many incidences that you will note from which you can pick up, you can get your hints of what is going wrong in the branch, and you will be able to then verify those things and get those things done. Make friends with the staff. The staff will be afraid of you, so as soon as you go, say hi, hello, ask their names, remember their names. Remember, normally when I go, I tell the peon, oh, I like the tea very much, and please serve me the tea. That is what I say, and he is the person who is able to give some good hints if something has gone wrong in the branch. The next thing is about reporting. There are 2 reports that we have to give, the statutory audit report and the long form audit report. These are 2 different reports, and it will be dealt with in the next sessions. But let me tell you that the statutory audit report is a report in which everything that you have to tell the branch, the bank management, and to the central auditors should be included there, because that is a report which the statutory auditor will read before he finalizes your report, before he finalizes the bank's report. LFAR is what we call in the company's language the management report. Because it is a management report, it is read by the statutory auditors after the audit is finalized, after the audit is signed. So even if there is something important point that we have mentioned into it, it will not get included simply because he has not read it. And the branch managers have got a habit to tell you, if you find something, please put it in the LFAR. Please don't get misled. If there is something important, if there is something critical, please ensure that it is included in the main statutory audit report. And as I go forward, I will tell you certain things that you will need to put in the statutory audit report. Okay, so that was regarding some good hints that I would like to give you. Coming to the audit of advances, as you have already been told, I am combining the advances and the IRAC lecture together. So as I proceed with the advances, I am going to tell you about the IRAC norms also, and of course there will be on the PPT there are no stories, but I am going to tell you some stories to take.
Ismail
Yes.
sir, viewers are experiencing some noise. Is there
Okay.
any fan or anything nearby which
No,
has to
nothing is there. Nothing is there.
can you just remove the headphone and see for a moment, sir? No, you remove from the computer knob and you can speak directly.
Yeah, can you hear me?
A little better, sir. We can hear you, sir. I think you can.
This is better.
We are getting an echo of my own voice.
Hello, is this better?
A bit better, sir. I think you proceed. We will see, sir. Yes,
Hello.
please. Yes, sir. It is better, sir. Sir. I think sir is having a little unstable connection. We'll just try to call him over phone and try to reconnect. In fact, there was a problem with the speaker's net connectivity. We have tried to contact him and ask him to reconnect. As soon as he connects, we will re-engage, sir.
Mr. Jain.
Yes, sir. Yeah, you are visible now, sir. Can you share your screen, sir?
Yeah. Okay.
Yes, sir.
Okay.
A screen has not come yet, sir. Screen has not yet come.
Has it come?
No, sir, not the screen has not yet come, sir.
Thereby, स्क्रीन नहीं आती है. तो नहीं पहले बार कट जाता है.
मैं इधर सामने में
आवाज नहीं आती
Yeah,
यहाँ
it
से.
was, Ismail,
Okay.
sir,
Yeah.
it has come. Yes, yes.
Okay. You can see.
Please.
Okay. Okay. May I start?
Yes, sir, please, sir.
Okay. Sorry, guys. My internet is having some problems, so this is going to, and because there are no people to repair it, we have to do with whatever is available in this lockdown. These are the downsides of the lockdown. Okay, don't worry about it. Okay, let's come to the audit of advances. Hello.
Yes, sir, you can proceed, Ismail, sir.
Yeah. The screen is not changing, I think.
It is changing, sir. We are seeing guidance note on audit of banks now. Further, you please take to the
Yeah.
next.
Okay. Okay.
Yeah, you can continue.
Okay. So this is one book that has been published by the CA Institute. Very important book. And along with the circulars of RBI, the list of which I have given and which have been uploaded, I have given only the important circulars that are there. Besides that circulars, it is very important that you go through this book. This has also been downloaded for you, and this is meant, go to the section that is for the branch auditors. It starts at after about 200 pages. Read this. A lot of information about the audit is available in this book. Besides that, there are some important laws about which you need to have the knowledge. The bank is governed by the Banking Regulation Act 1949. Now, it's not a very big act. You can read it, but some important points that are there in this act which you should know are as follows. First, the bank, most of the banks are companies under the Companies Act. So they have issued shares. But in the bank, they cannot give loan against their own shares. That is section 20 of the Banking Regulation Act. As per that act, a bank is not allowed to give loans against its own shares. There is also a circular which I have listed down, Loans and Advances Statutory and Other Restrictions, dated 1st July 2015, Master Circular. In that also, more details will be given about this act. The next act is the Stamp Act. The Stamp Act is applicable on stamping of the documents, and this changes from state to state. So if you have got a branch which is in say Tamil Nadu, the Tamil Nadu Stamp Act of 2013 will be applicable. If you go to Kerala, the Kerala Stamp Act of 1959 will be applicable. If you come to Maharashtra, the Maharashtra Stamp Act will be applicable. So if you have got branches in different states, as far as the stamping is concerned, different Stamp Act will be applicable for stamping of the documents. And if that act does not say anything, then there is a Master Act, a Mother Act that is called Indian Stamp Act, which is a central act which will become applicable. Next, Law of Limitation, 1963. The Law of Limitation says that if a document has been executed on a particular day, the validity of that document is 3 years from the date on which it has been executed. For example, if there is a promissory note, if it has been executed on say 1st January 2015, the validity of that promissory note will expire on 2016, 2017, 2018. On 1st January 2018, the validity of that promissory note will expire and it is not valid. Now the question will be that the documents go on for so many years. how do we ensure that if the document is not valid? Yes, there is something that is called ADS, LAD, or BCC. ADS is Acknowledgement of Debt and Security, LAD is Letter of Acknowledgement of Debt, and BCC is Balance Confirmation Certificate. Each bank is supposed to take such document within 3 years so that from the date of that LAD or ADS or BCC, the validity of the original document gets extended by another 3 years. So some of the banks take this letter every year to avoid the documents becoming time barred by law of limitation. Most of the banks take it once in 2 years so that the validity of the document can get extended. The next important document is annual closing guidelines issued by the bank. As soon as you are given the audit, as soon as the audit will be given to you, the bank will also give you some closing guidelines. Read that guidelines, and there will be one problem in this guidelines, and that is, for example, the guidelines will say that the safe deposit locker rent has to be provided on cash basis. Now, as you know about our accounting standards, everything has to be on mercantile basis. So what do? Do you follow the guidelines or do you follow the accounting standards? My suggestion is, not my suggestion, this is what you need to do, is that you will need to follow whatever is given in the annual closing guidelines. But this is something which is not in line with the accounting standards. So what will you do? When you prepare your final report, your statutory audit report, you will mention that everything has been done as per the standards which have been prescribed by the institute, but except for cash basis based on the guidance issued by the bank. The other thing that is there is the interest on NPA accounts. As it does not depend upon what the statutory auditor or the central auditor will be saying. Everything that you need to say in your report about the branch has to be mentioned, and I repeat, has to be mentioned in your statutory audit report. Otherwise, that report is not complete. Now let's come to verification of advances. In most of the banks, in fact in all the banks, the accounts are computerized. And since the accounts are computerized, from the computerized accounts, if you know how to take out statements, if you know the commands, it is very good. If you don't know the commands, don't worry about it. You just go and ask whatever statements require for your LFAR, whatever other statements require. Be assured all those statements are available from the computer. All those analyses are available. The problem will be that the moment you go and ask the staff or you go and ask the manager that this is what is required, he or she will say this is not available. Don't get disheartened. Tell them, I want to call up the computer department people of the bank. Call them up, they will give you the commands and you will get your statements. That is why I say that it is available. Don't spend your time making manual statements. Everything is available as far as the analysis and whatever is required for the audit from the computer. We will start with not funded advance. Normally we have got funded advance, we have got non-funded advance. The problem is that, as I said in the beginning, there are certain things that we don't know, and because we don't know, we tend to not do the audit, and because we tend not to do the audit, those things are left out. Those things get left out, and one of those things is about the non-funded advance. Okay. There are three types of non-funded advances: guarantee, letter of credit, and co-acceptances. There is a master circular of 1st July 2015 on that, which you need to read. These are all off-balance sheet items. Off-balance sheet items means that in the branch, there will be an entry that will be passed, but as far as the final accounts are concerned, this will not appear in the balance sheet because these are all promises. They are not actual loans given. So that is why they are called off-balance sheet items. They are considered as contingent liabilities, and the details of this is entered into the notes to accounts. Now let's start with financial guarantee. I'm going to do some action with my hands to explain this to you. Guarantee, LC, and co-acceptances. You can see my hand. Okay. Now, okay. This is the person who wants to take the guarantee, and this is the banker of the guarantee. This is my right hand. Okay. Suppose in Chennai, the metro has to be built. It has to be built by the person that is a L&T Larsen and Toubro company, and it has got its banker. The order will be given by, this is my left hand, the order will be given by the government or the metro authority. So there are three parties in this: Larsen and Toubro, the banker of Larsen and Toubro, and the metro company or the government. Metro company, while giving the order to Larsen and Toubro, would like to have an assurance, a promise from somebody other than Larsen and Toubro that if they give some advance to Larsen and Toubro, the Larsen and Toubro will return that money. Also that Larsen and Toubro will complete this contract within the time given. So one is a financial assurance and one is a performance assurance. There are two types of guarantees: financial guarantee and performance guarantee. Performance is about the performance of the contract, and finance is about the money given. So this company, metro company, tells Larsen and Toubro, please go to your banker and obtain what is called an assurance that if you fail, Larsen and Toubro fails, the bank will reimburse that loss to the metro company. Larsen and Toubro goes to its banker. The banker gives a guarantee, and that guarantee is handed over to the metro company. The metro company keeps that guarantee. This is called a guarantee. The entry in the books of the bank will be a liability because they have issued a guarantee to the metro company. At the same time, the bank will take another paper from the Larsen and Toubro, and that is called a counter guarantee, saying that if we have to honor this guarantee, you assure us, L&T, that you will make good that payment. So there is a guarantee which is a liability, and there is a counter guarantee which is an asset in the books of the bank. That is why you find a non-funded advance entry on two sides of the balance sheet, the liability side and also on the asset side. One is a guarantee, one is a counter guarantee which they have received from the L&T. If everything goes while good, there is no problem. Probably, suppose if L&T fails to execute the contract, then the metro company will tell the bank to pay the money. That is called invoking the guarantee. The moment the guarantee is invoked, the bank will pay some definite amount to the metro company, and this will become an advance now. It was a non-funded advance. When it is invoked, it will become a funded advance. Now I am going into the IRAC norms. A funded advance of a guarantee where the bank has actually paid the money is due on the day on which the bank has paid it, and it is also overdue. It means that if it is not received within 90 days, it will become a NP account. We will deal with this later on. So this is as far as the the guarantee is concerned. Normally, a guarantee cannot have a maturity period of more than 10 years, and Reserve Bank has said that non-funded advances, guarantee, LC, CoAcceptance, should not be given to customers who are not regular customers of the bank. It means that funded advances should also be given to these banks, because basically these guarantees, LCs and CoAcceptance do not have any collateral securities attached to it. So if the non-funded becomes a funded one, there is nothing that is available to the bank to recover that amount. The next thing is letter of credit. Again, this is a promise. Again, this is the promise. Same way, now there are four parties. The buyer who wants to buy the goods, the buyer's banker who is attached to the buyer, then there is a seller, and there is a seller's banker. If a guarantee, I forgot to tell you, if in the guarantee the parties involved, one is in India, one is overseas, this is called a foreign guarantee. If both the parties are in India, it is called an inland guarantee. Same way in LC, if both the parties, the seller and the buyer, are in India, then it is called an inland LC. If one of the parties is outside India, either the seller or the buyer, it is called a foreign guarantee, foreign letter of credit, sorry. So there is not much difference between foreign and Indian items. Only thing is foreign exchange rules and FEMA rules are involved. Besides that, inland guarantees or inland LCs or inland CoAccept or inland facilities are nearly similar to the foreign guarantees or foreign facilities that have been given. Coming back to the LC, the seller wants to sell the goods to the buyer, but he is not sure whether the payment will come. So he tells the buyer, you go to your banker, the buyer's banker, and you tell your banker to issue me a letter. That letter is called letter of credit. The letter of credit says that if the buyer fails to make the payment, the banker says that I will make the payment to the seller. Then the seller will sell the goods, make the goods and send it to the buyer, and the buyer will go on making the payment. Suppose if at any point of time the buyer fails to make the payment, the seller will write to the banker of the buyer saying that your buyer has not paid this money and please pay this money to me on this bill. When the seller or his banker does that or write a letter to the buyer's banker, this is called devolvement of LC. When a LC devolves from a non-funded promise, it becomes a funded advance, and like the guarantee which is funded, on the day that this funding is done, it is a due facility and it also becomes overdue on the same day. So if within 90 days it is not cleared, it will become an NPA account. This is as far as the letter of credit is concerned. Now let's move to the third item, and that is co-acceptances. Again, there are four parties: seller, buyer, seller's banker, buyer's banker. The seller wants to sell the goods to the buyer, but he is not sure whether the buyer will make the payment on the due date. So what he tells, the seller sends the goods to the buyer, the bill and all the documents. It is signed by the buyer saying that after so many days or so many 60 days or 90 days or 30 days based on the terms, I will make the payment. So he signs what is called an acceptance on the bill. The seller tells the buyer that I want somebody else also to co-accept this bill. That means also accept this bill. So the buyer goes to his banker and tells, please sign on this bill that you are co-accepting. Once the bill is co-accepted, that means again signed by the buyer that in case the buyer fails to pay, the banker will pay. This bill goes back to the seller, and on the due date, if by any chance the buyer fails to make the payment, the seller will send these papers via his own banker to the buyer's banker, and the buyer's banker will have to make the payment. When the buyer's banker will make this payment, this promise or this co-acceptance, which was a promise, will now become a funded advance. As I said for the first two items, it will become due, and overdue on the same day, and as per the IRAC norms, in 90 days if it is not recovered, it will become an NPA. This completes our 3 non-funded advances. Now let's come to the funded advances. Various types of advances are there, funded advances, or various types of advances are there. One is based on fund and on non-funded. Non-funded we have just seen. We will deal with the funded ones after this. Then there is based on geography. If both the parties to the deal are in India, as I said earlier, is called an inland facility. If one of the parties for which the benefit is given or for which the advance is given is outside India, for suppose for export or for import, then those are export or those are import facilities. So those becomes foreign facilities. They are called export facilities based on geography. Then we have got based on security. If there is any tangible security attached to the advance that is given, tangible, not intangible, tangible security attached to it, it is called a secured advance, like stock, book debts, fixed deposit receipts, gold, LIC receipts, etc., etc. They are all secured. If there is no security attached to it, if it is only on basis of a promise or of a personal guarantee, it is called an unsecured advance. Then it is based on sector. Sector has been divided by the Government of India, priority sector and non-priority sector. Priority sectors are people who are small borrowers like agriculturists, housing loans, small shop owners, MSME, etc., etc. They are all called priority sector loans. Each and every bank is mandated, even foreign banks are mandated to give about 40% of their loans to such priority sector. The rate of interest is low, the terms and conditions are better than the non-priority sector. So this is again loans based on the sector, which is priority sector, non-priority sector. All these classifications which I have just listed out, when you sign the statements, the loans will be classified into all these categories by the computer themselves. Now let's look at the type of advances that are available, inland advances and it is foreign advances as far as the bank is concerned. The first one is a demand loan and a term loan. The banks have a very good habit or very bad habit of having terminologies. When you go to the guarantee, you will find that it is called some site guarantee. If you go to the LC's bill, you will find site bills, documentary bills, etc., etc. Big terminologies are given. If you want to read the terminologies, go into that bank audit book that I have given. What I am explaining to you is the simple basic of that advances. Similarly, in demand loan, term loans, you will find many terminologies which are being used, but the simple fact about this is as follows. Demand loan. Demand loans are given by the bank, but it is never recalled on demand. Term loans are given by the bank, but it is given on installments and it is recoverable in installments. So what is the difference between a demand loan and a term loan? Generally a demand loan is given for 36 installments and it is given against movable assets. A term loan is generally given for more than 36 months and it is given against fixed assets or it is given against immovable assets also. So that is the difference between the demand loan and the term loan. As far as the basic is concerned, it is one and the same. Then we have got something called cash credit. In the banking sector, there is one advance which is given. Once it is given, it is never recalled in the lifetime of that company or the borrower, provided the borrower is very regular in giving his documents, renewing the account and paying his interest, and that advance is called cash credit and overdraft. These are advances which are once given are never to be repaid, provided the account is running well. So you have to only pay the interest and you have to submit certain papers, you have to get them renewed, that's all. These are advances which are cash credit. Now, generally cash credit vis-a-vis overdraft is given against stock and book debts. So if there is an advance against stock and book debts, it is called cash credit. If the security is other than stock and book debts, it is called overdraft. So like demand loan and term loan is one and the same way cash credit and overdraft is one and the same. Only thing is the underlying security is different, and these are the nomenclatures which have been given by the bank. If a cash credit, in a cash credit account, some more advance is given, additional advance is given by the bank over and above the cash credit limit or the DP limit, drawing power limit, it is called temporary over limit, TOL. This TOL is secured against the assets which have already been mortgaged or already been hypothecated, and it is a secured advance as far as the bank is concerned. Similarly, in overdraft, if an extra amount has been given, that is again called TOL, temporary over limit, which is again secured against the assets which have been mortgaged or which have been pledged or which have been hypothecated. But at times there is something that we see in the bank in the current account which is called TOD, temporary overdraft. Now this temporary overdraft is given on personal guarantee. It is unsecured, it is for a short time, and it has to be repaid, and generally you will find this TOD in current accounts only, generally. There is also another such overdraft which has been given, which is unsecured, and that is cash, that is credit card advances. If credit card some advances are be given, there is no security beyond it. It is unsecured advance. It is basically like an overdraft which has been given by the bank to the borrower. Now, the next facility is bill purchase and bill discounted. Again, something that we are very, very afraid of in the bank. What is bill purchase? What is bill discounted? It has got a lot of different terminologies, documentary, site bills, etc., etc. All those terminologies, if you want to see the terminology, go into the book and read into it. I am going to explain to you in very simple terms the same four parties that I dealt with LC, the seller, the seller's banker, the buyer, and the buyer's banker. I will explain bill purchase and bill discounting you with these four parties. Okay. Now there is a seller who wants to sell the goods, and there is a buyer who wants to buy the goods. There is a seller's banker and there is a buyer's banker. The seller wants to sell the goods to the buyer. What he does is that he dispatches the good and to the buyer along with whatever documents that he has to say for to be sent to the buyer, but he does not send the documents related to it to the buyer. What he does is that he hands over those documents, that is the bill and the railway receipt or the transport receipt, to the banker of the seller. The seller's banker will pass on those documents to the banker of the buyer, telling the banker that your buyer, your client, is going to receive these goods. I am sending you the documents. Please don't hand over the documents unless you receive the payment against this. The buyer's banker will call the buyer, will tell him this bill is coming. Please take these bills and please make the payment. And once the payment is made, the buyer's banker will pass on this money to the seller's banker, and the seller's banker will adjust the advance. Meanwhile, while this transaction is going on, the seller has asked his banker to give him some advance against this bill that has gone. The seller's banker will give him some advance against the bill after keeping some margin, and that advance is called bill purchase. I repeat, it is called bill purchase. It is legally and technically a secured advance. Legally and technically a secured advance. I will explain these terms when I come to bill discounting. From Kashmir to Kanyakumari, the goods normally will take not more than 7 days to reach from Kashmir to Kanyakumari. So from wherever it is going in India, it will go in that time. As a result, a bill purchase facility has to be cleared in a maximum of 1 month, nothing more than one. Sorry. The facility has to get cleared within 1 month. If it doesn't get cleared within 1 month, you have to ask the branch manager why this bill purchase facility has not been cleared, because as I said, the goods take about 15 days to go and all other transactions should get cleared within 15 days. So the bill has to be cleared within at a maximum within 1 month's time. This is called bill purchase. Now let's move on to the second facility, that is bill discounting. Again, the same 4 parties: buyer, seller, buyer, seller's banker, buyer's banker. Okay, but now the movement of the goods is slightly different. From the seller, when the goods have been dispatched to the buyer, the documents which in bill purchase went to the seller's banker, it doesn't go to the seller's banker, it goes directly to the buyer. So the seller sends the goods and the documents to the buyer. The buyer accepts the goods. He will make the payment within 30 days or 60 days or 90 days based on the terms. He will sign on the bill saying that I have received the goods. I will make the payment after 30 days, 60 days or 90 days. And that bill then goes to the seller, back to the seller. Now the seller goes to his banker saying that this goods I have already delivered. My payment will come within 30, 60 or 90 days. I want an advance against this. The seller's banker will give him some advance after keeping a margin. On the 60th day or the 90th day, the seller's banker will pass on the bills and the documents to the buyer's banker. The buyer's banker will call the buyer and tell him that this bill is now due. Please make the payment. The buyer will make the payment to the buyer's banker. The buyer's banker will pass it on to the seller's banker. The seller's banker will pass on the payment to the seller after adjusting the advance that he has given. So this advance normally gets cleared within 90 days after the advance has been given, unless the term of the bill is more than 90. Normally the bill is 90 days, not more than 90 days. Sometimes even 180 days bills are given based on the terms and conditions that are there. So this advance is legally an unsecured advance, but technically is a secured advance. Now let me explain the term legally and technically. Legally means in bill purchase, the goods were in the custody of the seller or his agents, that is the seller's banker or the buyer's banker. So it was in the custody of the seller through his bankers. It was not in the custody of the buyer, so it was a secured advance because the goods were in the control of the bank. Whereas in bill discounting, legally the goods are already in the custody of the buyer. So the seller or the seller's banker or the buyer's banker have no lien over this. So legally this is an unsecured advance. But technically, as far as the bank is concerned and classification in the bank is concerned, Reserve Bank has said that these advances, bill purchase and bill discounting, have to be considered as secured advances on the same lines as stock and book debts are considered, because stock and book debts are not in the custody of the banker or anybody else, and yet for the purpose of the classification it is considered as secured advances. So book debts and stock is legally unsecured, but technically for the purpose of classification as per the Reserve Bank of India, it is considered as a secured advance, though it is in the custody of the buyer. So bill discounted also is legally unsecured, but technically it is a secured advance. Now let me give you some stories. Bill discounted stories. This is my first story that starts off. There are about, at least I'll be able to cover some 6 stories during the course of my lecture. 6 or 8 stories I'll be able to cover. The seller sends the bill as a bill discounting to the buyer, and on the due date the bill gets very clear. Now once the seller does that, he does the second bill, the third bill, the fourth bill, then he goes to his banker. The seller goes to his banker, tells him that I have got a lot of such bills coming up. Why don't you sanction a limit to me? So the seller's banker will sanction a limit to the seller. Say the limit is 1 crore rupees. In the 1 crore rupees, the seller will first send the first bill, which is cleared on time. He will send the second bill, which is cleared on time. He will send the third bill, it is cleared on time. Slowly the limit builds up, and the seller finally has utilized 1 crore of his limit to the total extent that has been sanctioned. One fine day, all these 1 crore bills are due. On the due date, the buyer's banker, because the bills are being held by the seller's banker, will send the bills to the buyer's banker. The buyer's banker will call up the buyer, telling the buyer that the bills are due 1 crore rupees, please pay. He calls up the buyer, the phone is switched off. He calls up the buyer on the mobile is not in existence. The buyer's banker is not perturbed. He sends the peon to the buyer's office. The buyer's office is closed. When the peon inquires around what has happened, they all say that this man was on a rental office. He has closed the office and he has gone away. So we don't know where he has gone away. So the phones are switched off and the buyer has vanished. The buyer's banker is not worried. He will send the bills directly to the seller's banker. The seller's banker will now get petrified. He will immediately call up the seller on his landline. What is the reply? Line has been disconnected. He will call up the seller on the mobile phone. What answer he will get? This phone number does not exist. He will take his own scooter, the manager, and rush to the seller's office. What will he find? He will find that the office is closed. He will inquire with the neighbors. What has happened? He said the seller had taken the office on rent and we don't know where the seller has gone away. The buyer has vanished. The seller has vanished. Who has given the advance? The seller's banker has given the advance. What is this called? This is called accommodation bills. Why is it accommodation bills? Because the bills that were going from the seller to the buyer were only paper bills, were no actual goods were given, and this facility was started or got sanctioned by the seller with the only aim to defraud the bank. That was the aim of the seller, and the seller and the buyer were both connected to each other, which the bank did not know. That is why when bill purchase or bill discounting facilities or even guarantees, LCs, CoAcceptance facilities are given, the Reserve Bank of India says, read the circular that I have pointed out, they says that it has to be given to a regular borrower of the bank. One. Second is that these facilities, because they are unsecured, they should be supported by collaterals which are secured or which are intangible, which are tangible securities like property, something of that sort, so that if something goes wrong in any of these facilities, bill discounting or in guarantee or in other things, the bank has got something available to fall back upon as far as the security is concerned. Now let's come to the extent of verification that you need to do as far as the advances are concerned. As far as the Reserve Bank has prescribed that any loan which is more than 5% of the total advance needs to be verified. So the verification of loan, if any loan, if the total advances of the bank is 100 crores, any loan which is more than 5 crores has to be compulsorily verified. The Reserve Bank has also said that any loan which is more than 2 crore rupees has also to be verified. So that is the extent of verification prescribed by the Reserve Bank of India. But if in that bank there are many NPAs, too many NPAs are there, then it is suggested that you increase the percentage of your verification. Nobody is going to stop you as far as your verification is concerned. At this point of time, let me tell you one more thing. You will say the time available in the bank is very, very short to do the advance. If you have started the audit and you are doing it, don't be afraid. I repeat, don't be afraid. If you are sitting in the bank doing the audit, if the regional office calls up and tells them, you tell them that I have not completed the audit. They will say, no, please give the report. He said, okay, fine, I am going to give you the report, but all that I have not verified, I am going to note down in my statutory audit report. Or all those queries which have not been sorted, I will put it in the statutory audit report. The reaction of the regional office will be, no, we don't want such a report. So you have to tell them, then please give me time. I am sitting here, I am doing the audit. I have to sign the reports and I need my own time to complete it. I am not coming to the branch, I am coming to the branch and I need to. Nobody is going to force you. Let me tell you, in our days, when we used to sign, 10th was a normal date. There was one occasion when I signed the report on 18th of April with the regional office managers sitting in my office pleading me to sign the report. It's another story. If I get time, I will tell you that story. But if you are firm on that, if you are sitting in the bank, please don't be worried. Tell them I'm going to give an incomplete report. Do you want that? With all the remarks, they are not going to accept it. So these tactics by the branch manager or the regional manager are all tactics to ensure that you do half the audit, sign it and give it to them. If something goes wrong, who goes behind the bars? We have got all the cases to see what happens if something goes wrong, as the first person who goes behind the bars is the statutory auditor. So please don't take that risk as far as you are concerned. I have already told you about the statutory audit report. It has to be a standalone report. Everything that you have to say has to go in that report. Long form audit report is only a management report. So please don't put the points of long form audit, statutory audit report in the long form audit report. Now let's come to the verification of advances. The most important ingredient required in verification of advances. I have not copied this from any of the books. This is from my personal experience, that this is what you require as far as the audit is concerned. Okay, can you see that common sense, Geeta?
Yes, sir. We can see, sir.
Huh? Okay.
Yes, sir. It's visible.
Oh, it's visible? Okay. So common sense is the most important ingredient that is required as far as the audit is concerned. And when I proceed further, I'll tell you what I mean by common sense. Next. Banks have the best maker-checker system, yet maximum frauds take place. Why? Why? Very simple. Systems are not followed. And that is why I tell you, don't sit in the manager's cabin. Sit outside. You will find that a clerk is there and an officer is there. The clerk has made the entry. The officer will tell him, please pass the entry also. So a maker-checker has been introduced, but the officer gives his password to the clerk to pass it. The whole maker-checker system goes for the toss. When you are sitting outside and there is one report, Ghosh and Jilani report, which you have to give, where you are going to comment on this aspect. So if you want to comment on those aspects, you have to sit outside in the branch, keeping your eyes and ears open to see what actually is happening in the bank. You cannot sit for many days, whatever days you are sitting, 3 days, 4 days, 5 days. make these observations and note down that this is what you have observed practically when the bank was in operations. This is the master circular on loans and advances. I think this has already been given to you in the folder that is there. Please read it. The first stage of advances verification is credit appraisal and sanction. Normally we look at the sanction letter and we go by the sanction letter if we don't get into what the appraisal has been done. But just for your knowledge, statement of accounts, financial papers, valuation report, credit appraisal, civil report, confidential report, and now the latest thing is the GST returns. So the GST returns have to be there. If you have the GST returns, you will be able to cross verify what is the sales and purchases declared by him in the GST report and what are the actuals now. When we go for audit, a whole year, that is 18-19 GST returns must have been filed. Call for the GST returns when you are looking into this account. Then there is a sanction letter, and then there is something called prudential norms. What is prudential norms? When you read the circulars, it says that one borrower cannot be given more than 15% of the capital fund of the bank as a loan. 15% of the capital fund of the bank. And a group of borrowers cannot be given more than 40%. Question number one, do you know what is 40%? What is the total capital of the bank? You don't know. Do you know whether this borrower, which suppose if you have got a big branch, whether it amounts to 15% or no, or 40%? No. You don't have the knowledge. But Reserve Bank says you have to look into it. So what do? Do you ignore it? Most of the auditors ignore it. And no queries are pointed out to them. But my suggestion is put this point into your statutory audit report that as for the RBI, this point needs to be verified, but at the branch level, these details are not available, and hence I have not included these details into my report. There is another point which Reserve Bank has said, that loans to directors, their relatives, their companies, their firms, has not to be given. The circular that I have referred to before this has all those details in this. Now, do you know who are the directors? No. Do you know which are the firms? No. Do you know which are their companies? No. But Reserve Bank Banking Regulation Act says that loans cannot be given to the directors. So what do? Again, go back to your statutory audit report. Add this point there saying that as per the BR Act, I am supposed to verify all this, but in the absence of details, I have not been able to verify. Now, one more point here. I think I forgot to say this in the beginning. In English, it is said, whatever is written is read. Whatever is written is read. If it is not written, it cannot be read. As auditors, majority of us, except the big four and the big firms, we have a habit of asking the branch manager everything in verbally, and then either we forget about it or they forget about it, or we don't get an answer. Quite a few things happen. Now, when you put that point in the report that I did not get this report, the branch manager will shoot back a reply saying that I was never asked for this paper. How will you prove without a writing being there that you had asked for this paper? So what do? Anything and everything, starting from the requirements the letter that you will send to the bank for the first requirements, put it in writing. You will say there is no place to do it. I'll tell you what has to be done. Take a piece of paper, write down with your own hand on a pad, take the signature of the branch manager, take a photocopy of that, take a photograph of that on your mobile. Everybody has got smartphone, and you can show that, put it on that, keep that copy with you, and at the end of the day, when you are finalizing a report, for all those points which your branch manager has not answered, send a letter back to him saying that these replies have not come. And after that, you will mention that in your report, and the branch manager will not be able to deny that he has been asked, because you have asked that in writing and you have got the proof available with you. The next point that comes up after appraisal is disbursement. Documents to obtain by the bank, documents to obtain from the borrowers. A lot of frauds have also taken place in this. We cannot get into details of it. Then stamping, I have already told you. Insurance, I have already told you. This is as far as the disbursement is concerned. Now the most important point. And this screen is going to stay there for the next at least 15 minutes or 20 minutes. Review of operations, which is most important. Most important thing in the bank is review of operations. It is like this. I will give an example of a car. If the car's engine is in working condition and there is petrol and the car is running, then by and large you can say that the vehicle is good, even if there is some dent somewhere, or the seat is torn, or some glass is broken, etc., etc. But if the engine itself is not working, then you cannot say that this car is good. Same is the case as far as the operation of the accounts is concerned, especially the cash credit. If there are operations in the account, if there is debits and credits in the account going regularly, then by and large, like the working engine of a car, you can say by and large this account is okay, but there might be some problems here and there in documentation or in stocks, etc., etc. But if there are no operations in the account, then it is like the engine of the car is not working. Your bell should start ringing. There is something wrong in this, and I will tell you how to look into the operations. A little while ago, I told you, talk to the staff and they will give you a reply. Make friends with them. Now I'm telling you, talk to the papers. You will say how to talk to the papers. Yes, I will teach you how to talk to the papers. And the papers will give you the reply back. But we have to ask the correct questions to them and they will give you the correct answers. I have given you the RBI circular, very old circular, 7th May 2015, regarding the framework for dealing with loan frauds, outlining 45 early warning signals. This has been given by Reserve Bank of India, and a lot of stories that I will be telling you are covered in these 45 points that have been given. Now let's come to the review of operations back. The first set of papers. The first set of papers that you will look into is the operation of the account on the computer. You need not take out printouts. Just sit on the computer. When you sit on the computer, you are not going to make any changes. So you take the auditor's password. Don't work on the manager's password. Work on the auditor's password. Because if something goes wrong, if you in the managers and you are doing it, you will be blamed for it. So don't use the manager's password, anybody else's password. Tell the manager, I need the auditor's password. Auditor's password is one where you have got only viewing rights. You don't have any operation rights. Okay? Or if you are doing something and that is not available, ensure that some other staff sits with you when you are sitting on the computer. Open the account. You cannot check all the accounts. So first of all, you have to take a list of all the cash credit accounts which are there. From that, you have to mark out about 5%, 10%, 15% of the accounts that you have to verify, and now you go into those accounts and start just looking at the operations. When you look at the operations, you already know this party, that this is so much loan has been sanctioned, so much advance has been sanctioned. Look for very big odd credits or very big odd debits. Big debits, big credits. Or for that matter, no debits, no credits. Now let's understand one point. In any business that you verify, at least one side of the bank should have check transactions. If he is a retailer, he is selling the goods by retail in cash, so there will be cash deposits, but purchases are by check. from the wholesalers. So the purchases, the debit side of payment will be by check, even if deposits are by cash. Same is the case with the petrol pump. Sale is by cash, but purchases are by check. Going the other way around, suppose if he is a scrap dealer, he is purchasing things in cash, but he's selling it to the factories, to the mills. So his sales will be by check, though his purchases will be by cash. So in any business, at least one side has to be by check. If both the sides are cash, or that means your bell should start ringing. Why there has been no checks item or as far as this account is concerned. Okay, so that is point number one. Odd items, odd entries in that, look into it. I don't say that they are not part of the business, but you need to verify to whom the payments have been made. As I go forward, I will give you some examples of what are the things that I have come across as far as this big credits and big debits are concerned. Turnover disproportionate, either very high compared to the sales and purchase or very low as compared to the sale and purchase. These are all, as I said, indicators. That doesn't mean there's a fraud, that doesn't mean there's a problem. But like a doctor, what does a doctor do? A doctor, when you go to a doctor, my stomach is paining. So what he'll do, he'll first put his stethoscope, he will check your pulse, he'll check your heartbeat, he'll check your things, he will tell you to open your tongue and show him, he will examine your nose. So what is he doing? He is doing different examination of different parts of your body, and then he will touch your stomach, saying where it is the pain. Finally, he is doing a diagnosis and he's arriving at why the pain is there. So if you tell him that my stomach is paining, he'll not just look at the stomach, he'll look at all other things. This is called diagnosis. The same way, when you're looking at an account, you need to do a diagnosis of the account, and you need to look at all these signs before you arrive at that there is some problem as far as this account is concerned. So this is the first thing that you need to do, the operations in the account. The next thing, very, very fantastic thing, and that is the stock and book debt statements. You take those statements starting from March 2019 to February 2020. March 2019 to February 2020. Take the statements. Look at the stock of March 2019 declared by the party as per the stock statements. Then look at the audited accounts which are submitted in the month of September, and look at the stock and book debts shown there. What will you find? Till today, in my own audit life, I have never found any account which tallies with both the things. But don't panic, it is still not a fraud. If the stock declared in March is 20% higher or 30% higher than what is finally audited, it might be that in the stock statements, they have valued it as market price. In the book debts, in the final accounts, they are doing it on cost basis, or there has been some write-offs that we have suggested, or some sort of adjustment that is done, and it is fine. But if the stock that has been shown in the stock statement is 100% or 200% higher, or the stock that has been shown in the audited statements is just 20% or 15% or 25% of what is declared, your bell should start ringing. Something has gone wrong. This man has declared a stock which is much, much higher than what he actually has as per the audited accounts, and he is taking a limit which is not due to him. So your bell should start ringing. There can be some genuine reasons. I will give you an example where there is a genuine reason. There could be a fraud, or there could be something that
Sir? Hello? Sir, some audio problem is there? Chairman, sir?
Yeah, I think we have lost connectivity with him. We'll just wait if he's able to reconnect. Otherwise, we'll call him.
Okay.
We'll just wait and see. Ismail sir, are you there? No, I think we'll have to ask him to reconnect.
I'm calling him, sir.
Yeah, please do, please do.
So he's reconnecting, sir.
Okay. In fact, many places there are connectivity issues. All these mobile data which used to work pretty good is become very, very slow these days.
Yes. It appears giving the 1 month due date seems to be hitting the connectivity also hard.
Correct. In fact, there's a small message which says that platforms like Facebook, YouTube are facing unprecedented levels of traffic also is the reason. And bigger places, the congestion is more actually.
Yes. In fact, the government had issued an order that all telecom companies should stop these streaming services from using mobile data. So if you see mobile data only if you have broadband, it is being streamed using mobile data because bandwidth consumption. I think it's getting heavy now.
Viewers, we have given the download link which contains the materials of all the 3 sessions. You can download it and future whatever the user says on new circulars, we'll be adding it to this folder. So this folder is going to be dynamic. So just before the back audit, you can kind of visit this folder
Yes.
and take benefit. Geeta ma'am, what did the speaker say?
Yes, sir. His connectivity problem is there. He's trying to reconnect, sir.
Correct. Okay.
So I asked him if we could help him. He said no. From his side is only the problem.
No, the problem is the data bandwidth is not coming in a lot of places actually.
Yes.
In fact, a lot of questions are coming. Few questions are coming on the CA examinations, whether it will happen on time. Probably we'll have to first wait for the lockdown to get open, and ICAI will be only taking a call after that. So too early to speak on whether it will happen or not happen both ways. I only request the students who are watching this kindly study, make good use of the time. Probably the relaxed time for you to make your studies better. So do that. And in fact, even for the bank audits, it is only after the lockdown is over we'll be very sure of the dates that when we need to start. And if they're going to come in hotspots or zones where there is containment, they're going to definitely face some issues. Geeta ma'am, can you just try to call him again and check with him?
Hello.
Yeah, ma'am. What did he say?
No, still he had some problem. It seems he is trying to reconnect, sir.
Okay. We'll wait for a minute or two. I think it's okay.
Yes.
I think sir has come. He's joined.
Okay, sorry. This is the problem with my internet.
Technology has its advantages and disadvantages.
No. Yeah. Can't help it. Okay.
Can you just share your screen, Ismail sir?
Now, you can see the screen?
No, not yet, sir. Not yet.
Okay, can you see it?
It's coming.
Oh.
Yes, sir.
Okay.
Yes, sir. You are on, sir. Please.
Okay. Sorry, guys. My internet is a problem, so it got disconnected. Can't help it. As much as you use the technology, you have to also be ready to see the downside of the technology. Okay. Hello. I can continue?
Yes, sir. Go ahead, sir.
Oh.
Hello. Ismail, sir? Hello, Ismail, sir? Again, it has become some problem, it seems.
I think the screen
I
is
think
still
so.
shared. Now it has got disconnected. Let's see if he's able to connect on his own.
Again disconnected?
Yeah, disconnected, but
Now
he
you're
cannot
back,
Not
sir.
connected, sir.
He's
You
back,
go
sir.
ahead, sir.
Now you can hear me?
Yes, sir.
Yeah.
Okay, can I continue?
Yes,
Please,
sir.
sir. Please.
Should I continue?
Yes, sir. Continue, sir. Go ahead, sir. So, Ismail, sir, you can go ahead.
No, I think the connectivity is getting lost again. Though we are able to see screen yet.
Very important topic, very interesting also.
Correct.
No, he is touching so many practical tips which are very much needed for the first timers, in fact.
Correct.
Ismail, sir?
I think we lost him again.
Yeah, I'm calling, sir.
Yeah, you can just check.
Hello. Sir, again you got disconnected.
He's come, ma'am. He's come.
Okay.
You're coming on the mobile.
Yeah,
Yeah. Okay. Is it all right?
Yes,
Yes,
sir.
sir.
All right, sir.
Okay. Can I continue?
Continue, sir.
Okay. Sorry. So I was at the stock statements, the March one and the one which is audited. Now move forward. To take the total of all the sales and purchases which have been declared in this March 19 to February 20 stock statements and verify it, cross tally it with the operations in the account. Is the operation very high? Is the operation very low? Look at it and you'll get some idea of whether all the stocks have been declared or not. Then look at the book debt statements. In the book debt statements, are there book debts which are more than 90 days? If the book debts are more than 90 days, which is not allowed, that means those are the debts which are against which advance cannot be given, and yet the party has taken the advance against those book debts. So looking at the book debts and the stock statements, you will also be able to see, look at the creditors. In the balance sheet, audited balance sheet, look at the creditors. Now what happens is that this stock which against which advance is given has to be a paid stock. But the stock is shown, but there is a lot of creditors which are there. So effectively, this becomes an unpaid stock. Then there is stock against LC. You remember I just told you about stock sent against LC? There is a stock against LC that cannot be included in this stock because there were वापस disconnect हो गया. Geeta, you can hear me?
Yes, sir. Yes, sir. We can hear you.
Okay. Okay. So again, that stock against book debts more than 90 days is something that is not to be considered. Now, once you look at all these statements, all the sundry creditors, so there is a lot of things that you can see as far as the book debt statements and the stock statements are concerned, which will give you an idea as a doctor to diagnose whether this account is running well or not. Now, I will give you two examples of how to look into the stock statement. These are actual examples where I went for stock audit to a firm. As you know, the yarn, the cotton yarn or any yarn is first manufactured in the at Rekron, that is Guwahati in Assam. It is then sent to Vapi in Maharashtra, which is for the processing of the yarn, and then it comes to Bombay after the yarn is processed. Now, one of the banks gave us two accounts of stock verification of the yarn spinners in a place called Vapi near Bombay. The first one, when the audit was there, we called her up. We said him that this audit has been given to us. We are coming there. So he told us from Bombay to Vapi, it's about 2 or 3 hours by train. He told us, okay, you take the train, come to Vapi station. My employee will come there, will pick you up. After he picks you up, you will be taken to my factory. We went to the factory. We did the audit. Everything was Whereby?
Sir,
Sure, sir.
sir, please go ahead, sir. Everything is fine.
ये तो
Okay.
पहले आया था ना message. That message had come in earlier. It's an old message.
So we went there, we completed the audit, everything was fine, we came back. So this was the first tax stock audit that we did. No problems were found in that. Then there was a second one. After 1 week, we called up the second guy saying that we have to do the stock audit of yours. The moment we told him, he asked me the question, where do you stay? I say, I stay at Bombay Central. He said, my chartered accountant will come by car to pick you up at your house. What he said, my chartered accountant will come to pick you up at your house by car. That statement for me was an indicator that something is wrong in this account. This statement was an indicator. Till now I have not gone to the account, but this was an indicator. So the chartered accountant comes, me and my partner, we go to Vapi. Remember, the first one told us come to the Vapi station and then they will pick you up from there. This guy told us he will come all the way to Bombay, which is 3 hours away, and pick us up in the car. Anyway, we went there. We did the verification. Again, we did not find anything. Everything appeared to be fine, but that doubt in my mind that there is something wrong in this account did not go away. So while looking at the stock statement, we were looking into it, we found an item which was said stock in transit. What was that? Stock in transit. Now normally stock in transit is a genuine item provided that the stock that has left from Assam has left before the end of the month. One. Second is it is paid for by the party. And third is that stock has to arrive in Vapi within 7 days, because that is the time that it takes to come from Assam to Vapi. When we looked at it, that item, we went back to all about 14 stock statements of last 14 months, and we found that every month there was a stock in transit of 2 crore rupees. Now, if there is a stock in transit of 2 crore rupees, naturally it means that in the next month, the entry in the purchase register, in the inward register or the excise register, should be at least 2 crore rupees of stock coming from Assam. When we verified that from the excise register, we realized that at the most, stock of only 50 lakh rupees has come. What did this signify? That this entry of stock in transit in the stock statement was a bogus entry. And my sense is that that idea was given by none other than our fellow chartered accountant to the party, to the borrower, and that is the reason now I could do 1 + 1 2, that why did he come to our office to pick us up, because there was something that he wanted to hide. Anyway, we found this, but we did not talk about it to the management, anything. I wanted to see where this money has gone. So we came back to Bombay. We went to the office of the borrower to look into the accounts, and in the accounts we found that during the year he had retired 2 partners from his firm, and he had paid about 2 crore rupees to the 2 partners to leave the firm. Now those 2 crore rupees normally cannot be paid from the cash credit account, because the partner has to bring in that money to pay the partners. He did not have that money, so what he did was he paid from his own cash credit account, and as a result, the stock level went down. So our friend chartered accountant advised him that nobody knows, nobody understands what is stock in transit. Just put a 2 crore stock in transit, and to my surprise, it ran for about 14 months. And in those 14 months, the bank auditors, the bank staff themselves had been to the factory and verified the stock, and nobody pointed it out. What I mean to say is that this is the poor level of verification that is done even by the bank people. So a little doubt, get into the details, and you will find out what are the things that you can find out. Now, I will give you another example. A reputed paper manufacturer in Mumbai. Again, we went to his factory to verify stock statement, nearly 10 crores of stock statement, everything was fine. There was a few items which was called stock sent for process to the processors. Now that is a genuine entry, that when the stock is sent for processing to any processors, the stock is included in the stock statement and shown as stock in process. But in the stock in process, I found an item of this loan was given by X Bank. I found a name X Bank 2 crore rupees. I was surprised that in the stock in process, why there is a name X Bank 2 crore rupees. Bank is not a processor. So if anything has gone to the processor, it should be the name of the processor and not of the bank. Anyway, at the godown, we did not get any explanation. When we came to the office, the director told us that when this facility was sanctioned, it was a 10 crore facility, but against that, the bank told them to deposit about 2 crore rupees as margin money. So he made an FD of 2 crore rupees and kept it with the bank. Now that was a margin. What did this guy do? He said, where should I put this margin? Because I've paid this amount. So I have added it to stock in process. So what has happened? That the bank has taken a margin to secure itself, and this guy has added it to the stock and taken the advance against that. So if you read the stock statements, a lot of things can come out. Another example. We went to the bank audit. It was a 4 crore advance, and the stock statement was given about spare parts. Now spare parts are small parts which are valued at 10,000 rupees or 15,000 rupees per piece, or that value. So when you see the stock statement of 4 crore rupees, naturally the size of the stock statement should be this much. What we saw was it was just a one-page statement with 4 items noted on it. That is where our bell started ringing, that there is something wrong as far as this account is concerned. How can the stock be in forward? So now the first is the doubt arises. You find something, but you cannot put that as that there is a problem. So what did we do? We went back and said, who has verified this stock? Fortunately, we found out that just 15 days before we started our audit, a bank official had verified the stock. We also found out that the party has got about 6 godowns where the stock is maintained. We came to know from the sanction advice, we came to know that from the insurance advice. So we knew that there were 6 godowns where the stock is stored, and the stock statement also showed 6. We called for the bank inspection report, which was done 15 days ago, did the report, and we called the person who had done for the stock inspection. Incidentally, one of the godowns was right on the 8th floor of the building in which we were sitting, the bank building. So I asked that man, the bank man who has gone for the stock statement verification. I said, did you go for the stock verification 15 days ago? He said, yes, I went. Did you verify all the stocks? He said, yes, I verified all the stocks. I said, fine. This stock statement which you have given me is only a 4-line stock statement. Now, when you go to verify the stocks, you have to have the list of inventory. Kindly produce to me the list of inventory that you have verified when you say that you have verified that stock. He said, no, I verified. How did you verify this stock? Second point, you went to one godown. How much was the stock? The stock is in 6 godowns. He had no answer. How many godowns did you go to? I went to 3 godowns. Again, that answer was wrong. So from all that documentary evidence and what he said, it was a long story that went. Finally, it was found that the stock was not there, and this account was classified as straight as a doubtful account. Now, where was the starting point? The starting point was a 4-line stock. For a 4 crore stock, that was the starting point. The ending point was, after doing all these searches, we found that it was an NP account. The stock was not there. This is just a bogus statement which was either prepared by the borrower himself or most likely by the chartered accountant of the borrower in whose offices these statements are made. One suggestion that I would give you, and this is a practical thing that I face, when you find something, before even telling the management anything, get the papers that you have found Xerox photocopied. Why? Because the moment you point it out to the management, next day that file will vanish. When you ask for the file the next day, oh, I don't know where the file has gone, you will not be able to get the papers because they know there is a problem. So before pointing it out to the management, especially to the manager, you need to get that file Xerox or the photocopy so that you have got documentary evidence available with you. Another example, when you go to the bank, if suppose the advances are 100 crores and one of the borrowers in that bank is about 50 crores or 60 crore rupees, be sure this is a man who is definitely putting pressure on the bank, taking undue advantage of the bank. I have faced nearly 3 such cases in my audit life where one borrower is a dominant borrower of the bank and he takes undue advantage. The statement that will come in the branch and make to them is that because I am having my account here, your salaries are available. If I am not in the bank, your salaries will also not be paid. So examine that account. 2 years ago, we got one such branch where out of 50 crore advances or 60 crore advances, 50 crore belonged to one party, and that account was already NPA into D1 and it was going to D2. They wanted to save that. The account was restructured. NP account was restructured in the month of July, but because the wife of the director was not ready to sign a personal guarantee, the account restructuring was not done, and it was done on the last day, that is on the 31st of March, the day the accounts were closing, and it started at 3 o'clock in the afternoon and it went on half the night to 4 a.m. or 5 a.m. that they were doing it. This is what the manager told us. The moment we came to know this is the story, we knew there is something wrong in the account. So what we did was we opened up the restructured sanction advice. we saw all the points that were there. See, the bank staff is also cautious to ensure that all the shortcomings of the accounts are noted. If they don't note it, then they will go back behind the bars if something goes wrong. So they had noted down all the discomfort, all the shortcomings in this account. It was a long one. We don't have the time to get into all these things. But at the end of the day, the account was restructured and it was saved from going into D3. Now, what do you do with this account? In the IRAC norms, there is a clause which says that the provisions which are suggested by the Reserve Bank of India are minimum provisions. If you feel something, you can recommend even higher provisions. So after doing all that work, I mean, it took us about 2-3-4 days to do all the document evidence. After doing the document evidence, we realized that the security that was shown was not there. Some of the securities were not there. And at the end of the whole thing, looking at all the things, there were some frauds committed. Many things were there in that account, which was noted down by the bank themselves in the sanction advice. We made a suggestion to the statutory auditors that in our opinion, though this account is a 40% provision account, additional provision of 50%, which is 20% of the total loan amount should be made. We were told by the statutory auditors, the statutory auditor happened to be a friend of mine who was doing the region where we were there. He told me that Mr. Sonawalla, nobody took the objection to this and that 20% additional provision was made. The point is that when you get an indication, you need to get into the details of it to find out what are the issues, and accordingly you need to put documentary evidence if you want to say something to the auditors, to the central auditors. There's another example very recently in one of the branches. 3 companies dealing with stainless steel. Stock is at the same place. The 3 concerns are sister concerns and the accountant is the same. Now these are the points which were known to us. We did not go to the godown. By virtue of these 3 indicators, same business, stock at the same place, sister concerns and the same accountant, you can be sure that stock is not available in all the 3 godowns, in all the 3 facilities. Well, we did the same thing as we did for that stock audit. We called the person who had done the audit. He was ABM, Assistant Branch Manager. Before that, we took all the stock xeroxes of the papers, and I made the branch manager stand in front of me while I was questioning the ABM. My first question, did you go to do the audit? He said yes. I said, this stock statement doesn't give any details of the inventory that is there. Please give me the inventory of the 3 godowns that we have done. No answer, not done. How do you know that this is not the same stock that has been taken? Did you verify? Where is the inventory plan? Many questions were there. Finally, he agreed in front of the branch manager that I only went there, signed it, and I came back. And then, of course, with all other document evidence, we made this account as a NPA account in that. So what I mean to say is that looking at the stock statement, looking at the book debt statement, looking at the operations, these are papers which will talk to you. If you talk to the papers will talk to you and they will tell you that there is something wrong, but you need to talk to the papers and you need to take out time to go through these papers. You cannot go through these papers for all the accounts. So for some accounts, you will need to go through these papers wherever there are big advances, and these are the cases in which you can do this verification. Yeah, but
So Ismail sir, no issues, sir.
Yeah, I think screen is not moving, but otherwise you are there, sir. Yeah, it has moved, sir. Yes.
Okay, fine. Okay. I'm not a technological guy like you, Mr. Jain, so I need to take help from my son. Okay, so renewal, enhancement, reschedulement, balance confirmation. Let me tell you, now I'm going back to IRAC norms. In IRAC norms, it is said that if renewal is not done within 180 days, the account will become NPA. What does it say? That any sanction has to be renewed on the due date or within 90 days. Any ad hoc facility that has been given has to be cleared within 90 days. If it is not cleared within these days, that account after 90 days becomes NPA, becomes irregular. If this irregular continues for another 90 days, the account will be considered as NPA even if the facility is running very well. So just by virtue of renewal not happening, the account can become an NPA. There is another law which is there as far as the NPA is concerned, which says that if stock statements which have been submitted, normally stock statements are submitted monthly or stock statements submitted quarterly. It says that if stock statements which are submitted are older than 90 days, it is considered as irregular. If a facility continues for another 90 days on the irregular stock statements, that advance will also become an NPA. So very simple, if the stock statement is of September or before that on which the facility is being sanctioned, that account will become an NPA. So as far as renewal is concerned and stock statements is concerned, this is what the laws state. Physical inspection, we don't go for physical inspection, but we can look at the reports that are there, which will give us an idea of what has to be done. And verification of charges has to be done. As far as charges are noted, that has also to be done. This completes our advances. Now let's come to the IRAC norms, income verification and asset classification norms. These norms are also called NPA norm, non-performing asset norms. My practical experience has been, and till very recently, whether it is with the regional office or whether it is the national office, that even they don't know that IRAC and NPA are one and the same. Income recognition asset classification norms or NPA norms are one and the same. In one of our journals once, there were two articles. One was article on IRAC, one was article on NPA. So if the institute doesn't understand the difference, I don't blame all of you if you don't understand it. To fully understand this, it is necessary that you read all the circulars, especially the ones that I have pointed out to you, I have marked out to you and which have been uploaded here. Now let's come to the IRAC norms, basic principles. These IRAC norms were introduced in 1992, more than 25 or 28 years ago. Over the period of time, it has been modified, it has been made stringent, it has been made in more details have been added, but it is not a new thing. It has started way back in 1992. And this criteria of classifying of loans is an objective criteria based on the record of recovery. So whether it is a Tata or whether it is a Birla or whether it is Ambani, it doesn't make a difference. The record of recovery of principal and interest or the operation of the cash credit account will determine whether this account is a performing account or it is a non-performing account. And all the rules of interest, principal, classification into various categories, all are standardly made by the Reserve Bank of India. So there is nothing like that this applies to this person and this party will not apply to that person. Nothing of that sort is available as far as the IRAC norm is concerned. It is common for everybody, all the borrowers. There are some important circulars. The most important one is this 1st July circular IRAC norms. It is the thick circular which I have added in the folder. You need to read, and a lot of points from this we are going to consider. Then there is a master direction on areas affected by natural calamities. If a branch, I repeat, if a branch is in an area which has been declared by the government as affected by natural calamity, then these norms will apply. So if we are auditing a branch in, say, Tamil Nadu, probably this circular will apply. If there is a branch in, say, Kerala, which has not been impacted by natural calamity, then this circular will not apply. So when you go to the branch, you will need to find out whether there is any natural calamity circular applicable to that branch by virtue of a declaration which has been made by the government in this regard. If it is there, then some additional concessions are given as far as these norms are concerned. Then there were some norms on resolution of stress assets. We are not going to get into the details of it because these are all complicated ones and these are advances which are the big ones. As I understand, all the auditors who are there are the beginners. So the branches that we will get is about 50 crores or 75 crores, where probably such accounts will not be there. In case such accounts are there, you will need to read the circulars to do the work. The most important as far as our March 2020 audit is concerned is the MSME circulars which have been issued. There were circulars for, this is the small, medium enterprises, micro, small, medium enterprises, borrowers up to 25 crore rupees. Most of the accounts that we are going to get are on the MSME borrowers which will be there. There was old circular 7 February 2018. Then there was one in June. The important one as far as we are concerned is the 1st January 2019, followed by February 2020 circular, which is there, which we need to do because these are the ones which will mostly be applicable to the branches that we will be visiting. And finally, there is a COVID circular. The first circular was issued on 27th of March 2020, which we are going to deal with. And very, very recently, on 17th of April, just one day before that, on 15th or 16th, the governor of the Reserve Bank of India made certain announcements. And that announcements have been converted into a circular on dated 17th April for some additional concessions which have been given as far as the COVID circular is concerned. I have not downloaded that circular, but you can go to the site and you can take that circular. It is a small one or two page circular, 17 April circular, which is in continuation of the 27th March circular. Okay. Now let's look at the IRAC norms. What does the IRAC norms say? The IRAC norms are first, say, for the term loan. Definition of NPA, non-performing assets. It says that any interest or principal, if it remains overdue for a period of more than 90 days, I've given the paragraph number. Overdue means it is due, it is not paid on the date which is a due date as determined by the bank. Is not fully paid by the due date. Fully paid. The word fully is very important. So as far as term loan is concerned, it says that if all the principal and all the interest which is due on a particular date has not been fully paid within 90 days, this account will be classified as a NP account, even if 1,000 rupees is the interest, 1,000 rupees is the principal. The borrower has paid 1,000 rupees fully as the installment principal, but in interest he has paid only 900 rupees instead of 1,000 rupees. Still, this account will be considered as an NPA account because that amount of 2,000 rupees has not been fully paid within the due date or due date that was fixed by the bank. Now, if we consider 90 days, as far as we are concerned, that 90 days comes on, because this is a leap year, the 90 days comes on 31st of March. So if we don't go so strict, yet anything that is due on 31st of March, 31st of December 2019, and which has not been paid by 31st of March will generally come under this category. Of course, the COVID circular is giving some concession. We'll look into what that is. Bill purchase and bill discounted, against the same thing. If it is due on a particular date, not cleared within 90 days, this is what is going to happen. Credit card. Dues, it is a minimum due. The minimum due, if it has not been paid by the due date and that is outstanding for more than 90 days, it will be considered as a NPA account. Agriculture advances. I am not going to take agriculture advances in details as far as this is concerned, because it is itself a very big topic, but I'll just give you the definition, which is slightly different from what is applicable to other loans. Agriculture advances have got two: short duration crop and long duration crop. Short duration crop is a crop whose sowing to harvest time is less than 12 months. For example, groundnut, cotton, rice, wheat, etc. These are crops which are sown and which are harvested within a period of 12 months. It says that if interest or installment remains overdue for 2 crop seasons, if the farmer is taking short crops and it is due for 2 crop seasons, which is not a long duration, it will be considered as a NPA. And for long duration crop, if interest and installment remains overdue for 1 crop season, that is season longer than 1 year, it will be considered as an NPA. I am just giving you the definitions. The details you will need to look into as far as the if you have got an agriculture branch, you will need to read all the papers that are there for the agriculture. Now let's come to cash credit and overdraft. This is slightly trickier account, cash credit and overdraft. And when you go to the bank, be assured that the branch manager will not have made any account NPA as far as cash credit and overdraft is concerned, because it is slightly subjective. So in the year, he will have not made, even if the account has become NPA, because the computer cannot detect or cannot identify as the NPA accounts as far as cash credit and overdraft is concerned. As far as term loan is concerned, bill purchase is concerned, bill discounting is concerned, the computer itself can identify by virtue of the principal and the interest repayments. But as far as cash credit is concerned, it is difficult, which has to be done by the branch manager, and normally they don't do it. So what is meant by out of order? Out of order account means that the outstanding balance in the account remains continuously in excess of the sanction or the drawing power for 90 days. So if there is a sanction limit or there is a drawing power, now drawing power limit can always be lesser than the sanction limit, it cannot be more than the sanction limit. And from where is the drawing power limit determined? It is determined from the stock statements and the book debt statements. So if the account is continuously overdrawn beyond the sanction limit or the DP limit for more than 90 days, the account is considered as a NPA account. Or if the account balance is below the sanction limit or the DP limit, but during the last 90 days, there has been continuously no credits in that account, then this account is also considered as NPA. So it is within the limits, but there is no credits. Or there are credits, but that credit is not adequate to sufficient to cover the interest that has been debited. Now here I will straight jump to the IRAC norms under the COVID circular. What does the COVID circular say? That normally under this clause, we would have considered that if the interest of January, February, March, up to December, they have not been paid by within 90 days, this account will become NPA. But the COVID circular says that as far as the March interest is concerned, that has not to be counted as far as the NPA is concerned. So we will be counting the interest only up to February, January, December. If that interest has not been cleared or if the transactions are not there, then this account will be considered as. So that is a concession that has been given in the COVID circular. Income recognition, I already told you, it is as per the record of recovery of the interest. Interest has to be fully serviced. Not even 10 rupees has to be outstanding. If it is not serviced, then that account will become an NPA. So account can become NPA by virtue of principal not being paid, and account can become NPA by virtue of interest not being fully paid. So either way, if there is some outstanding, the account is considered as a NPA account. On the account become NPA. Now this is mainly true for cash credit and overdraft accounts, because as far as the term loan and bill purchase is concerned, the computer itself will be able to identify the unrealized interest. Unrealized interest comes normally in cash credit and overdraft accounts. So if the account has been classified by you or by the bank as an NPA account, then you have to go back and see what are the interests that have been debited during that period from the date on which the account has been classified as an NPA account. After that, has there been adequate credits to cover the interest that has been debited? If that is not there, that interest is considered as an unrealized interest. And when the account is classified as NPA, this interest also needs to be written back to the profit and loss account. One. Second is that once the account becomes NPA, and NPA doesn't happen on 31st of March only, it is a continuous process. So right from 1st April 2019 to 31st of March or 28th of February 2020, the bank must have classified the accounts as NPA. There is something called NPA date. When you take the NPA sheets, the sheets of loans where NPA accounts have been classified, there will be a date on which this account has become NPA. That date, that is the most important date, because based on that date, all other calculations as far as the loan is concerned, NPA is concerned, will be counted. There is some exception that has been given by the Reserve Bank of India, that if there is a term deposit or National Savings Certificate or Kisan Vikas Patra or Indira Vikas Patra or life policies, if there is adequate margin available in those loans, then that account need not be classified as NPA. I'll give an example. Suppose if there is a term deposit loan which is given against a term deposit of say 1,000 rupees, 750 was given as a loan or 800 has been given as a loan and 200 was the margin. Now the interest to be debited is say about 50 rupees. So it is within that margin of 200 which is available with the bank. The law says that if that margin is available, as long as the total overdues, total outstanding does not exceed rupees 1,000, this account need not be classified as an NPA account. But this exemption has been given only for term deposit, NSE, KVP, IVP and life policies if the margin is available. Now this is a consolidated chart of NPA. The first we start with is the performing asset. That is, account is performing. That means it is not overdue for more than 90 days. Now within that performing asset also, Reserve Bank has classified that into three categories: SMA 0, SMA 1, SMA 2. SMA is special mention account. This is something that the Reserve Bank had introduced a few years ago, saying that even if the account is standard, the banks need to classify that as SMA 0, SMA 1 and SMA 2, and they need to start following up these accounts, because before these accounts become NPA, after 90 days, the bank needs to take steps, needs to follow up with the borrowers, needs to follow up with the guarantors to see that the account does not become NPA. So the accounts are marked at SMA 0, overdue less than 30 days, then 31 to 60 days and 61 to 90 days. After this, the account becomes NPA. Now let me also tell you that even if the asset is a performing asset, at the branch level you will not make any provision, neither you will make any provision for the NPA accounts, but at the central office level, even if it is a performing asset, Reserve Bank has prescribed that certain percentage of the outstanding needs to be provided as NPA provisions. For agricultural loans, if they say 0.25%, for commercial real estate, they say 0.75%. For housing loans, they say 0.4% to 2%. For restructured account, it is 5%. And all those loans which are not covered under the above five categories, 0.4% of the total outstanding has to be provided by the bank as provision against their performing assets. So even just because it is a performing asset, it doesn't mean that no provision is made. From day one, if the advance is given, there is a minimum 0.25% provision that is made. That means on all advances given by the bank has to start making provisions, even if it is a standard asset. Now, after 90 days, the account becomes non-performing. Non-performing is a term which is used for substandard also, which is used for doubtful also. For both these things, it is called and also for the loss asset. These are non-performing asset. So, an asset is called non-performing if the overdue is more than 90 days. Now, within that, there are three categories which have been given: substandard asset, doubtful asset, and loss asset. Generally, an advance will move from standard to substandard to doubtful, but it will end at doubtful more than 3 years. It will not go into loss asset. A loss asset is a whole separate category. I will tell you when it gets into loss. As far as the normal account is concerned, it will go from performing to non-performing, that is substandard. Then it will go to doubtful 1, doubtful 2, doubtful 3 it will go. And that is at doubtful 3, that is more than 3 years, 100% of the loan, whether it is secured or unsecured, has to be provided for. Loss is a separate category. Though it is kept in the chart, it has got different norms. It is not necessary that from doubtful it will go to loss assets. It can go to loss assets even on day one as far as the loans are concerned. Okay, now let's come back to non-performing assets. An asset which has remained NPA, which has become NPA, that means overdue for more than 90 days, is a non-performing asset. It will remain substandard for the next 12 months. So if we take our dates, suppose if something is due on 31st of December 2019, on 31st of March, not counting the COVID circular, on 31st of March 2020, it will become a NPA account and get into the substandard category. So it means that any account which has got into the substandard category on 31st December 2018 will now get into the doubtful category on 31st of March 2020. Okay, so a substandard account, when it goes into doubtful, is actually overdue for 3 months, that is for the overdue NPA, plus substandard 12 months, that is total overdue is 15 months. So an account, I repeat, which has become overdue on 31st of March 2018 will on 31st of March 2020 become a doubtful account. Now once it is in substandard category, again it is divided into two parts, and this two-part bifurcation you will have to do at the branch level. What is that two-part bifurcation? Secured and unsecured. Secured by tangible securities, and unsecured means there is no tangible security, no guarantees are considered. Even if it is a Tata Birla account, it is their guarantees are not to be considered. You have only to consider the tangible security which are available. So whatever tangible securities is available, now here all the collateral securities will also get added to it as far as the valuation is concerned, for the purpose of security, for the purpose of classifying it as secure. So the loan will be classified into two parts, and the sheet that the bank will give you will have those two columns where the bifurcation has been done, secure and unsecured. Now if you find that the item which has been shown in the secured part is not correct, is not as per what you feel should be secured, it is something less, you cannot change the statements. In fact, in the bank, you cannot change any of the statements. So what do you do if you want to change? You have to pass what is called MOC. So you have to pass the MOC for the statements and all memorandum of changes, and all the changes in the statements that are given to you for audit will have to be passed through the MOC only. Why is this so? Because the moment they gave the papers to you on 31st of March or whatever date is, they also start consolidating of the accounts at the bank level. Now, if you make a changes and there are 5,000 branches, how are they going to find out where the changes have been made? And they'll have to do the consolidation once again. To avoid that problem, it has been said in the bank, it is given in the guidelines that you cannot make any changes. That consolidation will be handed over as it is to the central statutory auditors, along with the MOC that we have given. So all the MOCs that we will give, then the central auditors will pass that MOC in the accounts, and the final accounts that they will sign will be inclusive of the MOC. Whereas at the branch level, you have only to give the MOC, you cannot make any changes as far as the accounts are concerned. So standard, substandard, I have already told you, provisions is to be made. If the asset is secured, a 15% provision will be made. If the asset is unsecured, a 25% provision will be made as far as the account is concerned. And if it is infrastructure loans, then 20% provision will be made as far as the accounts is concerned. Now let's come to doubtful. Once the account has stayed in as a substandard for 12 months, it will now come down into doubtful. It can also go to performing, provided all the overdues that are there as on the date on which it is have been cleared by the borrower. So if the borrower clears all the overdues, then yes, during the year the account can become standard. That is why my suggestion is, when you go to the bank and you start verifying the IRAC norms or the loans, first ask them for the last year's certified statements by the previous auditor, and you start from there and see which are the accounts which were there in that year, last year, 31st March 2019, that he has classified as substandard, doubtful, or whatever that category is, and now you trace that account to 31st March 2020 and see what is the position. If either the account will have gone down or the account would have gone up. If overdues have been paid, the account would have become performing asset, standard asset. If the overdues have not been paid, the account would have become doubtful account. A substandard account cannot stay in the same category as far as March 2019 is concerned and March 2020 is concerned. It has to change the category. Either it goes up or it will go down. So that you will need to verify. If it has gone up, you will need to look into go into the operations of the account to find out why it has become a performing asset. Maybe the installments are cleared and that is why it has been done, or something has happened, that is why it has gone into the upper category. If it has not gone down, then definitely it will come down into the doubtful category. Maybe it can even go to the loss category. So from substandard or doubtful, a doubtful asset cannot become a substandard. So even if in doubtful, if some payments have been made, which by virtue of the payments, it can be classified as substandard, it will not be classified. Asset can be upgraded only from a NPA to a performing asset. So even if during the year, last year the account was doubtful, this year a lot of installments have been paid and it has become a substandard account, the overdues are less than 12 months, yet the account will continue to be doubtful. I repeat, the account will continue to be doubtful and the provisions will be made as per the doubtful, even if now by virtue of the overdues, the account can become a substandard account. But that upgradation will not be done. Within the category of NPA, upgradation is not allowed. Upgradation can only be from the NPA category to the performing category. Okay, now let's come to doubtful.
Ismail sir, sorry to intervene. Sir, last 10 minutes are there, sir, to complete.
Yeah. I've got my timer on here.
Thank you, sir.
I will complete. Yeah, I have my timer. Yeah. So now let's come to doubtful. Now in doubtful, once the account comes there, it is classified, again it is bifurcated into secured and it is classified into unsecured. Everything that is unsecured will have to be provided 100%. Everything that is unsecured will have to be provided 100%. It will be provided by the central office, but you will need to make that unsecured. So you have to be very, very careful as far as the valuation of security is concerned. In NP accounts, valuation of securities for the purpose of secured and unsecured is very, very important, because it is on this basis that the bank will make the provisions as far as the NPA is concerned. So it will go into D1 category up to 1 year. 100% provision has to be made as far as the unsecured is concerned. As far as the secured is concerned, the provision will be 25%. If the asset is in D2, that means it is doubtful for 1 to 3 years, the provision will be 40%. Remember that account that I told you, where out of 60 crores, 50 crores was given to one party, the dominant party. That account was already into the D2 category, and they were saving it to from becoming the D3. It was in between 1 to 3 years. That was a category. 2 years had happened that it had become doubtful, and they wanted to save that account, and that is why all that restructuring was done in that account. Okay, so if it is D2, the 40% provision is made, and if the account is doubtful for more than 3 years, 100% provision will be made as far as the asset is concerned, whether it is secured or whether it is secured, whether it is given by, whether the loan belongs to Tata or it belongs to Birla or it belongs to Ambani, it doesn't matter. That whole loan will be classified as 100% unsecured, 100% provision will be made as far as that loan is concerned. Some other important points, I think I have considered some of them. We'll again repeat. Term loan, loans again, term deposits, national savings certificates, etc., have to be considered, have not to be considered as NPA, provided adequate margin is available. But gold loans are not in that category. You will ask me why gold loans are not there. It is very simple. As far as term deposit is concerned, NSC is concerned, Indira Vikas is concerned, Kisan Vikas is concerned, life insurance is concerned, each one of them has got a value, and that value is in the custody of the bank or life insurance or in the custody of the post office. So since it is in the custody of effective custody of the bank, because the post office or the insurance has given a assurance undertaking to the bank that they will not pay, it is the lien is marked on that, so the money will come to the bank if they want it. So these assets are already secured because the margin is available. So in this, the IRAC norms do not apply till the margin doesn't get exhausted. But in gold loans, they are not sure what is the value of the gold. The gold may go up one day, the gold may come down one day. Secondly, they are also, the valuer has given the value. It might be that the valuation is not proper. So for that purpose, gold loans, even if there is a margin available, is considered like any other regular loans, and the norms applicable to term deposit, etc., is not applicable to them. Second is, as I have already told you, that all the classifications of income and asset is based on record of recovery only. Based on the recovery only, everything has to be done. Who is the guarantor, who is the borrower, what others is available doesn't make any difference. Third, I have already given this example. Above norms are minimum prescribed. In that case that I related to you, 40% provision was already being made. But looking at the condition of the account, I made a note for the central auditor saying that in my opinion, though this account is doubtful in category 2, I think more provision needs to be made. Instead of 40%, 60% provision need to be made. I gave my justification, and I was told by the central auditors that based on my note that I had given, instead of making a 40% provision, the bank had made a 60% provision. NPA norms are considered borrower-wise, car-borrower, and not facility-wise. So if one facility, even if a LC bill is outstanding and overdue for more than 90 days, all other facilities are okay. All the guarantee has been invoked and has been outstanding for more than 90 days. Even if one facility is overdue, the whole borrower will be considered as overdue, because the classification is the borrower is being made NPA and not the facility. There is one exception that comes up as far as the agriculture loans is concerned. In agriculture, the PACS, Primary Agriculture Credit Society, or the FSS, Farmers Service Societies, these two entities are given loans by the bank to be further advanced to the farmers. They don't use the loan themselves, it is to be given to the farmers. And there is a list of farmers to whom the loan has been given. So the norm says that if PACS or FSS have taken a loan for a particular list of farmers, then only that loan, that facility will become NPA. All other facilities taken by the PACS or by the FS will not become. So this is one exception of qua borrower. This is qua facility. Only the facility which has become NPA will be classified. All other facilities of that borrower will not be classified as NPA. Devolvement of LC, invokement of guarantees, I've already told you. Sometimes in the bank, these facilities are not shown as regular facilities. They are added to the suspense account and the money lying in the suspense account. So while verifying the accounts, you will need to verify the suspense account also, or some other account also, to see whether these amounts which have been paid on behalf of the borrower in terms of LC or guarantee are taken to the regular facilities or they are being shown there. Normally what they are supposed to do is that if LC is devolved or if guarantee is invoked, they need to add up this amount, debit the amount to the CC facility directly on day on which they pay, so that now the CC facility will either become overdue or overdrawn or whatever that is, and from the CC facility then you will be able to decide whether the account is NPA or they are not NPA. Consortium advance. In the very beginning, when the NPA norms came up, they were showing consortium advance as we have to look at what the other banks have done. But now they have said that the facility at the branch at bank at which you are looking at the advance only needs to be considered. State Bank of India may have made it a standard account by virtue of their repayments. That doesn't mean that in your bank it cannot be classified as an NPA account. This I have already told you. Stock statement. If more than 3 months old stock statements are there, it is considered irregular. If the facility is given for another 90 days, that means 6 months old, it is considered as NPA. Same is the case of renewals. In renewals, please let me tell you that renewals, short renewals is not considered. It has to be a regular renewal which is due. They do short renewals are not to be considered. Only if it is a regular renewal and that is not done for 180, if it is overdue for 180 days, the account will become NPA. As far as that advance, even if the advance is running properly, that doesn't make any difference. Accounts regularized by a few credits around the balance sheet date, you need to examine those credits. Maybe sometimes what they do, they will credit the account with an amount. So they will show, and they will pass a JV, and they will debit a suspense account in the bank itself. And on the same day, they will again debit the bank, they'll debit the CC account, they will credit the suspense account. So what has happened is that the computer is showing that some credit has come in the account. That credit is not actually a credit. It is a bogus JV passed by the branch manager just to save that account from CC. That is why I said, looking at the stocks, looking at the CC operations, you need to see what are the credits that have come. Are they genuine credits or are they such bogus credits which have been made by the branch manager himself? Now, one point which I left out is the loss account. If there is a erosion in the value of the security, then sometimes accounts, or there is a fraud, the account has to be classified directly as a doubtful account or the loss account. The law says that if a bank has been given a security of say 1 lakh rupees or 10 lakh rupees, a security value of 10 lakh rupees against which they have given a loan of 1 lakh rupees. Now, going forward, that value of the security has come down to 4 lakh rupees by when it is revalued. The outstanding is still 1 lakh rupees. Normally, we will consider this account as secure. RBI norm says no. If the value of the security has come down by more than 50%, then this issue of degradation in the value of the security will be considered as a doubtful account. So if from 10 lakhs the security has come down to 4 lakhs, which is this is more than 50% downgradation, this account, even if it is a regular account, will be considered as a doubtful account. Going further, if the value of the security from 10 lakhs has come down to 90,000 rupees, outstanding is still 1 lakh, this account will be fully classified as a loss account. I repeat, if the value of the security has come down from 10 lakh rupees to 90,000 rupees, that is more than 90% degradation in the value has happened. This account, even if it is regular, outstanding is 1 lakh, the whole outstanding will be considered as a loss asset. These are RBI norms. They're saying that if the value comes down, this is what has to be done. Upgradation, I have already told you, upgradation can be done only if all the arrears of principal and interest have been paid. Account cannot become from doubtful, it cannot become substandard, or from loss, loss account cannot get upgraded at all. But from doubtful, it cannot come to the substandard. From doubtful or substandard, it has only to go to the standard category as far as the classification is concerned. Restructured accounts, restructured accounts, you have to look into the circulars to see what has to be done. I think I am completing my time. Hello.
Yes, sir.
Can I have about 5 minutes or so more?
Yes, sir. You can take last 5 minutes. Yes.
Okay. I'm taking last 5 minutes. This is a very recent circular of MSME that is there. It is applicable to loans which are less than 25 crores. There are two circulars, 1st March 2019 and 11th February 2020. If an account MSME has already been restructured under the first circular, second restructuring under February 2020 is not allowed. What are the conditions? The account has to be standard. The total exposure, total sanction limit cannot be more than 25 crores. The borrower has to be registered with GST, and this restructuring has to be completed as per the second circular before 31st December 2020. Okay, these are the two circulars which are there. Account restructured before 1st January are not eligible. Post restructuring, the NPA norms will apply. The disclosure of all such MSME restructuring done has to be made in the notes to account. And if the accounts is now to be downgraded, the normal facilities will continue. The purpose is to mitigate the burden of debt brought about disruption by the COVID. This is basically a COVID circular. Rescheduling of payments. It is a very small circular. You can read it. Easing of working capital finance that has been given. Relaxation in the classification of special mention accounts is there. And as I told you, a new circular, additional circular on 15th April has also been issued. Rescheduling of payments, I have given all the points. Permitted to grant moratorium. These 3 months, you are already aware that from March to May, 3 installments have been given as moratorium. And as far as those number of days are concerned, because everything is calculated on the number of days, the new circular of 15th April, which has come down, says that when this moratorium is given, that period of moratorium will not be counted for SMA 1 or SMA 0, SMA 2, or even for the loan. So the loan is considered has to have been frozen between the 1st of March and 31st of May as far as the calculation of the number of days are concerned. Okay, what is permitted is deferment of the recovery. It is not forgiven. So after the period is over, the borrower will have to pay the interest or the principal that has been foregone, and based on whatever concession has been given by the bank or whatever it has been done, that will be that in that way the borrower will have to repay either his loan will get extended by 3 months or his interest will get debited now to the CC account. Now when it is debited, it is considered as debited but not due for payment. After May, it will be considered as due for payment, and then it has to be done. This relief is not going to downgrade any of the accounts. With this, I complete my presentation. I know I had to go fast, and in between my internet was also playing havoc. That also probably has got some COVID-19 infection, I don't know. So it was also not running properly, but that is technology. You can't help it. Thank you very much.
Thank you, sir. Viewers, because of paucity of time, we are unable to take the queries. If you have any queries, please share us in our upcoming program, which will be held on May 2nd by CA Amarjit Chopra, sir, our past president. Now, on behalf of SIRC of ICAI, and from our bottom of our heart, we thank our speaker, C. Ismail sir, for enlightening us about the grassroots of the topic. So though we had disconnected because of the internet problems, we were not disconnected with the topic, sir. You kept us alert with all your practical issues. I'm sure we will remember your session, and thank you very much. We practically get into doing, we will definitely remember you when we are practically doing this bank audit. So in this situation of lockdown, when it is easier to forget which day it is, or we lose our desire to learn, I congratulate all our viewers for their commitment to learn. Thank you very much. Thank you everyone for making all our online sessions making a huge success. Lastly, let us not forget the seriousness of the current situation, and please do stay at home and stay safe. And our next session will be on CBS and other aspects of CBS and other aspects of bank audit by CA Anand Jangid at 2:15. Please stay tuned for that session. Thank you. Thank you very much.
Thank you. Thank you.
Ismail sir, just the way
Yes.
we recovered from COVID, we'll
Yeah.
recover from COVID.
Okay.
So
Thank you.
thank you so much for a very comprehensive session, sir. Thank you.
Thank you. Thank you very much. Thank you.
Thank you.